This RealAg Radio Podcast is brought to you by new Barricade 3 herbicide from FMC. With a higher rate of fluroxapyr, Barricade 3 herbicide delivers the punch you need to control kochia and tough broadleaf weeds in crop for cereals. Bad news for weeds, great news for your crop. See your local retailer today.
It's time for RealAg Radio on Rural Radio Channel 147 on Sirius XM. RealAg Radio and RealAgriculture.com is your home for insight and analysis of the issues that are impacting your farm business. Let's get real and get connected with RealAg Radio. Welcome to RealAg Radio here on Rural Radio 147, Sirius XM. Shaun Haney, your host here on this Friday edition of the show. Thanks so much, everybody, for making RealAg Radio and Rural Radio 147 a big part of your workday. Also, a big shout out to everybody listening out there on the RealAg Radio podcast as well. And because it's Friday, we will have a bonus segment today for our panel. We got a great RealAg Issues panel here together today. We've got Evan Shout. He is with Farmer Coach as well as the host of the Truth About Ag podcast that you can hear at RealAgriculture.com on our YouTube channel or wherever you get your podcasts. So please check it out. It is in our Real Agriculture podcast feed. Evan is really one of the leaders when it comes to farm management education in the country. Looking forward to having him here today on the program. We've also got Lyndsey Smith and Kelvin Heppner from Real Agriculture as well. We've also got a beef market update today. Yes, Ann Wasko will be here from the Gateway Livestock Exchange to talk about what's going on in the cattle markets and all of those fun things. If you have any feedback on today's show, you can send me an email, shaney@realagriculture.com. You can also call or text the RealAg feedback line, 855-776-6147. Of course, don't forget to change your clocks for some of you. Besides Saskatchewan and Arizona, everybody else is on this daylight savings time thing. And BC, this is the last time. That's right. Premier David Eby has said that's it. This is the last time that people in BC will have to change their clocks. I think back to the election of President Trump where he said, which is one of my favorite lines, he was talking about ending daylight savings time and leaving the clocks where they are. And then there's a quote where he said, no, he's changed his mind. He's not going to touch it. Too controversial of a topic. Oh, I love it. Some people are very passionate about this. We've got a poll up at realagriculture.com asking your opinion on this. There's a bit of some lore out there that, you know, daylight savings time was created for farmers. Some people dispute that, but we have a poll going. What do you think? Should we just disband this whole idea? Forget about the changing of the clocks on a, semi-annual basis? As somebody that crosses time zones all the time, I don't understand how worked up people can get about, a 1 hour difference. But at the same time, I don't understand why we move the clocks. Saskatchewan hasn't blown up. They seem to be fine. They seem to survive without it. Great, pleasant people. I don't get all the hysteria around it, but we would love your thoughts and vote in our poll. Go to realagriculture.com. Amber Bell has a great story up at realagriculture.com as well of doing some man on the streeters. We're talking to people about the time change. Very fascinating stuff from BC. Okay, we're going to take a break. When we come back, we got Ann Wasko standing by right after this.
Questions about the markets? Sanoa by GrainFox is your AI grain market analyst, ready 24/7 to help you make smarter grain marketing decisions. Ask about market trends, pricing signals, basis, or what today's moves mean for you, and get clear, instant answers. Get a free trial and special savings at grainfox.ca/realag. grainfox.ca/realag. Ask Sanoa. Get an answer. Take action. It's that easy. Get started now.
We are broadcasting from the BASF Biofuel Summit in Calgary, Alberta. Ray Daniels, the head of sustainability for Canada for BASF. Why is this topic so important to you?
Well, it's important to us, Shaun, for two reasons. One, we have a commitment to farming, a commitment to Canadian agriculture, right? We see biofuels as a really clear opportunity for the future of canola and bringing value back to the farm gate. How do we help lead and facilitate that? Secondly, we also look at it from a perspective of investment and innovation. How do we get signals to the market to put more infrastructure and to invest more into agriculture, invest more into this space. And that goes very much the same way for BASF. We are committed to the future of biofuels and committed to the future of canola, obviously for many reasons. And so for us, it's about how do we help foster some of those signals that help create that investment into the sector that'll make this possible and a success for everybody.
Biofuel industry development in Canada, and this being an option, is critical. Domestic consumption of feedstock to deal with some of the supply that is out there. So we need to have more and more outlets, and this is one of them. And welcome back to RealAg Radio here for this Friday show. We got a RealAg Issues Panel coming up very shortly. But first, we got to talk to Ann Wasko, the Gateway Livestock Exchange. Ann, how we doing?
I'm good today, Shaun. How about you?
Hey, I'm doing great. Okay. Lots happening in the cattle markets. I guess give me the goods on what happened with prices this week.
Well, yeah, lots happening in the world. And so, of course, we're feeling, as markets always do, we're feeling that. And just to recap this past week in terms of futures markets, Shaun, they've been all over the place. We've had up days, we've had down days, and that volatility and that uncertainty, given what's going on geopolitically, that's not going to stop and potentially could get worse. So we'll talk about prices, but understanding that all of this outside impact is really playing into all the commodities, but certainly cattle being one of them. So first of all, last week we had lower cattle prices in the U.S. And so cattle feeders coming into this week were really wanting to, show some strength in terms of looking for some higher money. And so they've been standing out looking for higher money. As of when you and I are talking, we haven't seen prices established this week. I'm a little worried now with how things are going on in the Middle East and the unknowns as we head into the weekend, that maybe they don't get business done. We'll see what happens by the end of today. So kind of quiet, but just as a recap, last week the market in the U.S. lost about $5 live at $2.44 in Texas. Now the choice cutout is doing the opposite, so that's the wholesale beef price. And Packer in the U.S., the fed cattle slaughter so far this year is down 8%. So smaller production is going to push up, in terms of prices at the wholesale level. So our cutout is up. We're at $386.90 on the choice this week. That's up $9 from last week. The select's back about $6.30. So again, this is Packers trying to, as their margins are very much deep in the red, they've cut their kills, trying to prop the cutout so that they can kind of put a bottom to where their margins are. In Alberta, I'll just finish on prices and then it looks like you want to ask a question. We also haven't seen trade for the same reasons. Feedlots looking for higher money. Now, last week we had some good trade in Western Canada. We were $5.30 to $5.35 delivered dressed, which was $5. So we didn't lose money in Alberta last week, but same thing. We're waiting for trade this week. And just as a note, last week Canfax did report the steer market in Alberta at $3.20 on an average. That was a new all-time high. Previously, it was last September at $3.17. So we made a new high last week on fat cattle prices in Alberta. So,
and we need new highs, right?
We need new highs. Hey, let's. I've got three more numbers for you. Then I'll stop talking about averages. But we just rounded out February, and in Alberta, the average for the entire month was up 14% from last February, 313 and change. 8.5 weight steers in Alberta were up 33% from last February, 502 and change. And 5.5 weight light steer calves were also up 33%. So this market just new highs across the board, whether we're talking about last week or last month.
Do you think I'm gonna run I was thinking about this yesterday on the airplane with the pretty rapid spike we're seeing in fuel prices, as an example, because of what's happening in Iran. Like it's a sudden impact as the price of oil goes up here this week. Is that a test here of consumer demand for beef? Like, because it's so rapid, like it's like it gets your attention, right?
Yeah.
What do you think about that?
I think that there is cause for concern, and not just beef, but the consumer has X number of dollars, right? And so now, in terms of whether we're talking about heating or cooling homes or whatever the case might be, depending on what part of the world you're in, and in terms of that grocery list, and we know beef has gotten to record high levels at that grocery level, that there's no question that's got to be cause for concern. So now we see, it's always supply and demand. So can we ratchet, supply back enough to hold demand together, or is this going to be enough to start to see that weaken off? So that's on the watch list for sure, Shaun. Yeah.
Okay, cool. I appreciate that. We've got the January cattle inventory report. What is it telling us?
Well, the Canadian report different than the U.S. report, and we talked about the U.S. inventory report back in January, and yes, this is March. That's how we do it here in Canada. So it actually showed an increase to cattle numbers, beef cattle numbers in specific. So different going on in Canada versus U.S. So I'll run through some numbers. The bottom line, certainly seeing growth kind of across the board, more Western Canada than Eastern, but let's have a look. So in Canada, beef cow numbers were up 2% to start this year, 3.4 million head. Beef replacement heifers, because that's the other piece we're watching to see where the growth starts from, we're up 5%. So that's 544,000 head in total. In Western Canada, up 2% and up 5%. Cows up 2, heifers up 5. Just by province, so you can get a feel for, it kind of started in the West by the most aggressive. So BC was actually up 4% for cow numbers and 6% for heifer numbers. Alberta was up 2% at 1.5 million beef cows and up 5% for heifers. Saskatchewan was up 1% and 4% for heifers. Manitoba up 1 and 6. And Ontario was up 1% for cows and 2% for heifers. So it very interesting, but certainly led by the West. I do want to just make this comment before people jump to conclusions as to, that's going to be, negative or bearish for cattle prices. We operate in a North American market. So the fact that the U.S. report back in January said really no growth going on, beef cows were actually down 1% in the U.S., if you recall, and the Mexican border is still closed. So we're still going to see tight supplies driving the North American market. Canadian prices Canadian cattle numbers don't set prices. So I just wanted to add that as people think this thing through.
Well, and just remind people, in 2025, we brought in 500,000 feeder cattle out of the U.S. into Canada. So there you go. Right? Yeah, it is a North American market.
And then one last, we talk about percentages like they're, you throw them out. The increase in beef cows equals 65,000 head. That's the increase. It's not, that's not a big number, especially if you're talking in the U.S. And replacement heifers, 25,000 head increase. So that's the numbers we're talking about when we throw these percentages out.
And really appreciate you joining us here today for the Beef Market Update. All the best to you. Have a great weekend, and we'll talk to you again. We're going to do another Beef Market Update next week because we missed last week. So we'll talk to you again next week.
Gotcha. See you next week.
Great stuff. Hey, from nutrient management to the latest weather, market, and ag trends, The Dirt, an economics podcast, is your place for farm smart topics to boost your profitability. Join host Mike Howell on Season 5 of The Dirt podcast coming this spring. We've got more RealAg Radio and the RealAg Issues Panel coming up right after this. For the upcoming growing season, take advantage of RiseAzorb.
RiseAzorb performance has been proven on hundreds of on-farm trials, which you can view at bosssolutions.com. Additionally, growers can take advantage of the RiseAzorb Grower Guarantee Program. This program protects growers' revenue up to $40 per acre if their yields don't match their 10-year APH.
Discover the impact. Download the RiseAzorb Performance Report to see how RiseAzorb is transforming nutrient efficiency and driving results in the field.
Peter Johnson at WheatPete, RealAgriculture.com. I'm the host of The Word, and I love doing The Word. I love the questions. I love the challenges. I love having to apply agronomics to all over the globe and areas outside of my normal jurisdiction. Also, I love the feedback the most, where growers challenge me, tell me about their plot results, help me to learn. The Word, absolutely the best part of my day.
As you look ahead to the next growing season, there's a lot to consider when it comes to your crop. You need every possible advantage available to you. The Pulse School on RealAgriculture.com has everything you need to make the best choice for you and your farm. On-demand videos with leading industry experts, available anywhere, anytime. Go into the season confident and ready with the Pulse School on RealAgriculture.com.
And welcome back to RealAg Radio here on Rural Radio 147, Sirius XM. We are having some fun on a Friday. Next week is the Canadian Crops Convention. It's happening in Toronto. Looking forward to that, March 10th through the 12th. This year's theme is Trade in Transition. It includes a fantastic lineup of expert speakers. It's also a great networking event. We're going to see Ambassador to Canada from the U.S., Ambassador Huckstra is going to be there for a fireside chat. There's a lot happening. The Canadian Crops Convention is presented by Canada Grains Council and the Canola Council of Canada. If you want to find out more, go to canadiancrops.ca. It may say that registration's closed, but I don't believe them. They'll let you in. Just make a phone call. Okay, let's get to our RealAg Issues panel. Up first, Lyndsey Smith coming out of the nation's capital, Ottawa, Ontario. How are you doing, Lyndsey?
So well. It's Friday. There's so much going on. And yeah, it feels like spring might be in the air. And that has just changed my entire outlook on life. So it's probably false spring, but that's fine. I'm accepting it.
You're a sunlight-driven person, yet you live in a clouded geography.
It is. I don't do well in the gray. I need the blue sky.
What? Yet you moved to Ottawa.
Yeah. And yet I did. Anyway.
You had a big deal on your farm this week. You had the Minister of Environment and Climate Change Canada.
That's right. So yesterday, so this was one of those, and somebody asked me, it's like, oh, and did you invite your MP and the minister? No, they called us, which is always, I think, a good sign, and really interesting. But yes, I got to meet, my MP, Bruce Fanjoy, and, Environment Minister, Julie DeBruzen. They came to tour the farm yesterday to learn about how we raise sheep, learn about our integration with solar and at utility scale, and it was really fantastic. It was an open conversation, not all easy questions and answers, that's for sure. But honestly, dialogue is most of what we need to do, I think, on so many of these important topics. So it was wonderful to have them out, they rode a hay wagon to the backfield, and
as one does.
Yeah, as one does. Not maybe I would say appropriate footwear across the board for visiting a farm, but they did okay. So yeah, no, it was great. It was really great. Really appreciate being able to have those conversations for sure.
Yeah, well, hey, I was on a flight yesterday where a guy was wearing footwear not exactly appropriate for a plane either. So
was he at least keeping his shoes on? Because there's the other issue of people taking them off.
Yeah, the flight has got to be across an ocean for you to take your shoes off on a plane. That's one of the. I have many rules. That is one of them. But anyway, Kelvin Heppner coming out of Altona, Manitoba. Kelvin, how are you doing?
Doing well. I still have my shoes on here, but
that's good.
Yeah, we're doing well here in Southern Manitoba. We had some freezing. Yeah, we had some freezing rain overnight though, and it's supposed to get windy today. So fingers crossed, power's still on right now.
You're still wintering.
Oh yeah, we're still in winter mode here. Yep.
I was talking to somebody from Winnipeg yesterday, and they said it is so cold. Would you agree with that?
It's not like January deep freeze cold, but it's still winter cold. Yeah, we're not into spring mode.
Okay. That was a bit of a test. I know the person I was talking to listens to the show. This was a bit of a test exposing whether or not they were being soft or not. So
that's excellent.
Now they can email me. Also joining us is Evan Shout, host of the Truth About Ag podcast. You can hear on Real Agriculture. Also CEO of Farmer Coach, Maverick Ag. I don't know. These guys
keep going, Sean. Just keep going.
Read the whole CV.
What a resume this guy's got. Hey, Evan, how are you doing? Welcome back.
Good. I would like to say in Saskatchewan, we are doing our usual minus 25 to plus 5 in 24 hours. So I'm looking forward to warmer temps later today.
No kidding. Where were you this week?
I was actually in town for the first time in 3 months. We ran Farmer Coach in town this week,
oh, nice.
But this would be the first time I haven't been on a plane, and I honestly can't remember.
I hear you, brother.
Yeah, you're worse than I am. Let's be fair.
Worse is a good description.
Yes, that's why I said it.
Yeah.
Okay, I want to start off. Let's start off broad here. There is a bunch of farm management things we want to cover today because we got Evan on the show. But I think we got to start broad. Prime Minister Carney is continuing his, I guess, global campaign focused more on Canadian. I would say Canadian trade issues or diplomatic, foreign affairs issues than some of the things domestic back in Canada. We came off a trip to India, Australia, and now in Japan. Kelvin, it's weeks like this where it's very clear this is a different government than the prior Trudeau one.
Yeah, and especially when you hear the political leaders from these countries speak about the Canadian Prime Minister, there's a level of credibility that Carney brings, given his background as a central bank governor and into G7 countries, of course. And so there's whether it's accomplishing a lot in terms of actual practical progress on trade negotiations and commercial deals, I think there is some progress there happening. But the biggest change from the previous prime minister is the credibility factor. I think that these host nations give him when he comes and represents Canada, and that's something that Scott Moe, the premier of Saskatchewan, has talked about being a difference between the previous guy and this guy, and that I think certainly it's something that benefits Canadian agriculture. That's where these are major export markets, India and Japan, for our agricultural commodities.
I think the province of Saskatchewan in particular, Evan, it seemed to be very pleased with the fact that the trip to India, there was no, I'm going with low hanging fruit here. There was no dancing videos. It didn't create a bunch of controversy. Modi had put numerous posts on social media like X, talking about how it was so great and refreshing the relationship. I'm paraphrasing what he said, but it was very, very positive. But back at home, people are being a little bit critical about the trip, but I think for export-oriented industries like agriculture, Evan, in a province like Saskatchewan, people are like, hey, 2 thumbs up. This is a good sign.
Yeah, I mean, we got to be realistic here. I mean, the base wasn't set very high over the last decade, but at the same time, he's doing what he said he was going to do, which is open up some trade policies. I mean, we're hearing agriculture in the actual news, which, to be fair, I haven't heard in a long time, even before our last prime minister. So I think, I mean, whether good or bad, from a farmer perspective, we're in the news again. We're getting some trade deals at least talked about. And for me, that's a step forward. I mean, we've seen the markets move. Obviously, things in the world are not all less volatile, I guess you could say, but anything that he can do to open up markets, especially for Saskatchewan farmers. I mean, with Mo going over there on a couple of his trade deals, I mean, we're hearing good things. Obviously, we had Mo on the podcast, and it was way better than it was, which I'm taking as a moral victory right now.
Lyndsey, do you think it's all roses, though? Kelvin had mentioned, like, there's, I don't want to put words in his mouth, but on the surface things look positive, but it's getting things done, or like the actual like physical, hey, we have a better agreement or whatever, like an MOU, whatever. Are we hearing enough about that kind of stuff besides just better relationships?
So I think this is where one thing that I think I'm quite confident of is that I do think that Carney has a plan as far as these visits happen. There are goals for each of them. Then there is okay, then what happens next? How are we opening up trade? What else are we going to send? There's always, though, the political side and the diplomatic side that for some of these visits is far more complicated than just, we have what the world needs, this country needs it, we're going to sell it to them. That is, I think, the basis, of course, of all these trips and what Carney is out there to do. But it is the diplomatic and the political side that is far messier and far less straightforward as far as actually navigating and making sure we go forward. What I found really fascinating, though, is that when Carney was in Australia, he did a really interesting interview where he shared what he has learned from, say, dealing with the president of China or dealing with the U.S. president or these sorts of things. And I do at least get a sense that there is that like they sit down and they think about all these aspects and they think about how it looks and what they need to focus on in which countries. All of that to say, though, is that there's a reason Carney is out here doing all this, and it's because we are trying to at least add a little bit of balance to the very imbalanced trade that we have with, of course, our largest trading partner, where the bulk of what Canada sells goes to the U.S., and the U.S. relationship right now isn't great. So all of this is really important, and it's really messy on the diplomatic side, et cetera. But like, even if each of these trips is successful, which so far they seem to have been, all of that is good, but it's still not going to replace the U.S. by any stretch, right?
Yeah.
So,
that
Yeah.
That I think was, sorry to jump in, that I think was the message we heard from the other Canadian political leader that was overseas this week for the first time, Pierre Poilievre, traveling internationally to the UK and Germany. And that's been more of his messages. We need to acknowledge that the US is our biggest customer, will be our biggest customer going forward. And that's more part of Poilievre's presentation, but certainly Poilievre trying to bring some of that credibility, statesmanship to his persona over the last number of months as well, and certainly seeing that this week as both leaders, very similar messages that they were sharing on different sides of the world.
Yeah, I think it's a good move by Poilievre and the Conservatives to get him out of the country, because I think this is for a lot of people, this is his weakness. He has to prove his merit, and if he's up to the challenge of working with other countries and trying to he's very good on the domestic file. Like that's kind of his strength as a leader of the opposition. So I think it's good to get him out and show that he has the capabilities of doing it. Kelvin, before we take a break, I wanted to hit on the fact that one thing that Carney is being very criticized for is his waffling on what his opinion is of what's happening in Iran. He was one of the first world leaders that came out and showed support to President Trump and the Americans for the bombing in Iran. And it's almost like some of the people in the party kind of got a hold of him and like, whoa, I'm not really comfortable with this. And he has been waffling since, and people have been all over him.
Yeah, there's been some flip-flopping back and forth, and I don't know. I'm pretty sympathetic to that because it is such a complicated situation. And of course, the Iranian regime has done a lot of terrible things. And so at a really high level to support restricting that and reining that in, I think, yeah, that is something that many people would support. But then when you get into the details of what's happening on the ground, certainly lots that is very concerning there. And it sounds like Anita Anand is briefing cabinet or caucus today on what the government's stance is on this, so it'll be interesting to hear what comes out of there. But certainly, yeah, that is overshadowing many of the different events and issues that we're going to talk about on the show today. What's happening in Iran and the countries around there that are being dragged into it.
Yeah, good point. We're gonna take a break here, but I want to tell you about the Canadian Agri-Food Policy Institute. It's an independent think tank, better known as CAPI, that brings together diverse voices to advance future-focused policy solutions. Great partnership with RealAgriculture as well. We're hosting monthly webinars. We've got opinion columns from CAPI coming in, so it's great to work with Tyler McCann and the team over there. You can find out more about CAPI by going to CAPI-ICPA.ca. We'll be back with more of RealAg Radio here on this Friday's Issues Panel right after this.
FP Genetics brings new seed genetics to Canadian farms, empowering growers to thrive in ever-changing conditions. We are committed to helping farmers thrive with superior genetics, developing customer strategies to build best practices, all tailored to individual needs. Visit fpgenetics.ca to discover FP's dynamic portfolio of wheat, durum, barley, oats, peas, and rye, and to contact your local territory manager. FP Genetics. Gain a genetic advantage, experience the next wave. Thinking about Plant 2026? CDC Evident Durum from Alliance Seed is the clear choice with everything today's durum producers are looking for. High grain yield, strong disease resistance, and excellent end-use suitability. Built with resistance to leaf, stem, and stripe rust, along with protection against loose smut and common bunt, CDC Evident delivers the reliability and marketability growers need and the performance they expect. Learn more at allianceseed.com or call 1-877-270-2890.
Boost your yield and your bottom line with top-performing varieties from Alliance Seed, including AAC Weyburn VB Durum that features solid stem for soft fly resistance along with wheat midge tolerance and top yields. Count on genetics that deliver for your operation. Visit allianceseed.com or you can call 877-270-2890. 877-270-2890. Okay, let's continue the conversation. Hey, this week, Lyndsey, we had Josh Linville from StoneX on the show. That was on Wednesday. And we were talking about the impact of Iran and how that reflects on fertilizer prices. Strait of Hormuz, I heard this morning on Bloomberg, is essentially closed. Not good for nitrogen. Urea specifically.
Yeah, absolutely. And, this is one of those, I don't know who had this on their bingo card, but it's it's one of those, again, it feels like deja vu all over again, just in a much more concentrated way and very much on energy and fertilizer of the like supply chain disruption, right? So the point of like, it's not so much even things getting out, it's things being able to get back in, reloaded, back out. It's that once a shipping route closes, everything sort of accordions in, and then it takes forever to go out. The question becomes then not just, of course, the impact on price, but the impact on availability. And to that point, and maybe Evan's got some thoughts on this, on what you had priced. I know just even, I mean, this isn't fertilizer related, but it's diesel related. Lots of discussions this week on, even getting fuel topped up ahead of the seeding season and where prices have jumped around. So those who, of course, plan ahead maybe are in a better position. But for those that are, looking at spot or like in the near future, like the longer this goes on, the more difficult it gets. And it's just not good news all around.
Yeah, Evan, there's a couple things that I've heard in the countryside. One is in Western Canada, from a Western perspective, canola seed sales have been quite slow through the winter in terms of farmers kind of waiting to see maybe what happened with China or what happened with the markets leading into spring. Canola having to buy back some acres. And boy, if you look at a canola chart, I think I describe that as parabolic. I don't know if that's correct, but it is a straight shot upwards when we look at the canola future. But also, the amount of fertilizer that has not been bought. And during the commercial break, we were talking about, is that acres or is that number of farms? What is your thought on who has or has not bought fertilizer this spring yet?
Well, I think if we attack the canola one first, Shaun, I think part of it is just guys haven't sold any grain. I mean, we were waiting. I mean, the things are depressed. They don't have the cash to go out and buy canola seeds. So I think that's one of the contributing factors. I still believe canola acres will be through the roof because we've run enough projections to know right now on majority of farms, canola is the one crop that pencils. So I'm still high core bullish on acres on canola. So I think the canola seed will come back. I think it's just deferred. Let's be honest. Guys don't have a lot of excess cash right now because there's a lot of grain in the bin still. Fertilizer wise, you're not wrong. I mean, we've talked about it for a couple of years, is with the amount of volatility on the fertilizer or the grain side. You don't farm for 8 months anymore. You pretty much farm for 24, right? Best time to buy fertilizers, summer before. Best time to sell grain, May, June, July, the year after. Guys that have pre-planned, 100%. The fertilizer's bought. It's probably on the yard by now. The guys that haven't, because of, like I said, cash flow, guys haven't sold grain or guys are just tight. We're going to see that affect, I think, logistics. I mean, it's no longer just about price on either side of the equation, going out or coming in. It's now about timing of cash flows. It's about logistical constraints, essentially, because if we got that much grain in the bin, you tell me what happens with the railroads in the next, 3-4 months as guys try to pay some bills. Like there's a whole bunch of factors, but you're not correct. The price of urea, I think, jumped up close to 900 after the weekend. So guys are going to get stung both on logistics and on price right now.
Yeah. Kelvin, do you think there's other things between now and spring? Like, what else comes to mind in terms of like issues to be worked out on top of the, say the canola seed example, or fertilizer availability and pricing and things like that?
Mm-hmm. Well, I'm not sure. I think, what happens in this Iranian situation is certainly going to bear a lot on this and how people are feeling overall in the markets. Certainly, we've seen activity in equities and currency and everywhere this week based on the situation, people's reactions there. So potential for volatility there. We have, of course, at Bank of Canada, some rate decisions before spring in terms of that. But yeah, in terms of acreage, I think the StatsCan numbers that we saw this week, what was the canola number? 21.8.
Yeah.
We have to remember this survey was done in the middle of December through the middle of January prior to Carney's trip to China. This was done in the time when we were pretty down on the prospects of the canola market, and still that acreage number is pretty high. And like Evan said, I think there's probably a good reason to think that there's upside just since then, never mind looking forward, but over the last month and a half here in terms of new developments that have happened to drive even more. And that's, of course, the price ultimately is dictating that too. Just drive even more canola acres and shift towards canola on the prairies this year.
Yeah, when I look at that canola number, if I take my mind back to December, I'm taking the under on 21.8. But now that we've released it this week, I'm taking the over on the 21.8.
Yeah.
But I also think, hey, market's rocking, fantastic. It's good to see. We need it. I'm also concerned, though, in the fact that what does the season look like? If we plant 22 million plus acres of canola and have a 24 year, that I go back to that conversation with Matt Makins. We have to have a late
crop already.
Spring.
Yeah, close the hedge.
Yeah,
that's the part we haven't talked about is, guys. I mean, yes, fertilizer's gone up to 900. Well, canola at $15 works. So I think the big one is we're not going to see just a straight upswing, and guys are still holding back. I mean, even the farms I've been talking to lately haven't done a lot of futures. It's probably time, and if you're scared to grow it, put a bottom on it, put a put call. Let's actually use the marketing tools that we have. Insurance, there's tons of insurance against crop buyouts of contracts. Like, we need to start having more of those discussions, because right now, if you're not selling canola at this price, I mean, we're looking at 15 to 20% returns. I think you take it and wait out for some of the rest.
Yeah, no, that's good. We also had an interview this week, Lyndsey, with Kurt Blades from Association of Equipment Manufacturers that Bern Tobin did down at Commodity Classic, really talking about what needs to happen for the new machinery market to really pick up for ag dealers and OEMs. Obviously, the Canadian numbers we know, in 2025 were stronger than they were in the U.S., but January, kind of unbelievable. Like there was like 120 combines sold in Canada this January. There was only like 160 in the U.S. Though that ratio is kind of screwed up. Interesting interview with Kurt, Lyndsey.
Yeah, the ratio is, although we had a couple of people comment, like, if you had a couple big operations swap out an entire fleet in the same month, that would get us a good chunk of that number. So, but that would mean a lot of things lining up.
Too.
I know. Well,
not on the same scale.
Not at the, yeah. So not at the, I'm with Evan on this one. So, like, I think that Kurt did a great job being pretty balanced in the fact that, there are a lot of factors here that are still going to weigh on profitability, in which case, we use the equipment market as sort of a proxy to farm finance. At the same time, there are things like we just talked about with canola, et cetera, that, could essentially work our way back to a much more, let's say, average picture, in which case, it's maybe not the worst. It did seem to be a bit more like when we talk outlook, profitability, interest rates, et cetera, it did seem, I know it's maybe his job to seem a little bit more positive about it. It will be interesting to see, because AEM does this every month, how the next months since January sort of play out, to see if that was in fact just a blip, or, like just a coordinated sort of whatever happened there, or if we're seeing a different trend, and if we continue to see this difference between Canada and the US, which I think is interesting.
Yeah, well, our January 26 combine number in Canada was essentially identical to the January 24 number. It was a 450% rise from 25 January year over year, but it's actually back to the number where it was in January of 2024. I think it speaks to the fact that the reality is the financial situation is worse on farm in the U.S. than it is in Canada. It's a healthier financial situation in Canada than it is in the U.S. Like the numbers tell the story. Evan, you're nodding before we take a break here.
Yeah, the U.S., you're correct. I mean, obviously, Canadian farms are showing a lot more profitability now than what the U.S., even with the subsidy buyouts. On the Canadian side, I think you have two factors. The dealerships the dealerships and the financing companies around the dealerships are getting smarter. We're starting to see some better interest rate terms. I mean, 0% always brings a few farmers out of the woodworks to buy. The other one, I mean, let's call it what it is. We were in a crisis 3 weeks ago. Canola price jumps. All of a sudden, no longer a crisis in ag. So farmers are predictable, and we've seen uptake, and guys see profit all of a sudden, and it drives iron. It always does. It always has. It always will.
And if we should have learned from the past, what I'm a little bit fearful of here, Kelvin, is the fact that complacency on the China issue, like, yes, better terms today. Markets rallied. We got strength in the renewable diesel market in the U.S. But this isn't in perpetuity. We could be sitting here in September saying, like, I can't believe China put the tariffs back on us.
Yeah, going back to the last question you asked me a few minutes ago, where I didn't have a very good answer because now I've had some time to think about it. There is, the China status of trade with China. I think we can expect that to be fairly stable now, at least until the end of this year or later this growing season, unless, of course, something wild happens in CUSMA USMCA negotiations where the Carney government really upsets the Chinese regime. And that's the other thing you mentioned, renewable diesel, Shaun. U.S. biofuel policy. I don't think in Canada we acknowledge the extent to which that dictates our canola market as well. And certainly if there's changes there that are not favorable to canola, that also would be downside risk to canola between now and the heart of the growing season. 1 in 3 canola acres are used for the purposes of biofuels. Just
crush is about $1 per bushel higher right now than conventional. Let's be fair.
Be paying attention. Okay, everybody, we're going to take a break. But first, FP Genetics brings new seed genetics to Canadian farms, empowering growers to thrive in ever-changing conditions. Visit fpgenetics.ca and join thousands of Canadian growers who trust FP Genetics to deliver innovative, reliable seed genetics season after season. Experience the next wave with FP Genetics. Back on RealAg Radio right after this.
And they're off. It's volunteer canola on the inside, followed by hemp nettle, flick's-wheat, buckwheat, and narrow-leaved hawksbeard. This is one tough field, folks. But hold the phone here, because here comes Prospect herbicide making a move on the outside and eliminating the competition one by one. And now, way out in front, it's canola for the win. With 2 powerful modes of action, glyphosate-friendly Prospect provides exceptional control of broadleaf and grassy weeds to get your canola off to the best start possible. Ask for it at your local retailer.
Co-op has been beside local farmers and ranchers for generations. With Western Canada's largest fuel network and a team of local agronomy experts, Co-op is built to keep your operation moving forward. With deep local knowledge of the factors affecting your farm, we're ready to provide trusted advice in the field and on the ground. Count on Co-op to support your entire operation from season to season. Co-op, here for your farm, here for your family. Visit your Co-op Agro Center to talk to a team member today.
Who's in control of this ship? But welcome back to RealAg Radio here on Rural Radio 147. We were talking about Iran and the impact on things like fertilizer and fuel prices. Maybe a good time to talk to your local co-op this seeding season. With full tanks, you can avoid the rush and start your field work at the earliest moment possible. Plus, with the Spring Early Delivery Program, you can save time and free up cash flow. Receive early on-farm delivery of high-quality fuels and delay billing at participating co-ops. Talk to your local co-op fuel team member today to arrange early on-farm delivery and ensure you are fueled up for spring. We've got Evan Shout of Farmer Coach and the Truth About Ag podcast you can hear on Real Agriculture, as well as Lyndsey Smith and Kelvin Heppner. You know them very well with Real Ag. Okay, Lyndsey, interesting data that I've been talking about on the road this week, which is farmers seeing and responding to us in quite strength, agreeing with the statement of, in our last Real Agri Studies research in January, agreeing with the statement that improving my farm financial literacy, my financial decision-making is going to add more profitability than government programs or the latest and greatest in technology. It looks like we're getting the message here. Financial competency is key in these times.
So what I'm really hopeful is that this is real, and it is an encouragement to take action. Because I think many people would say, this is what I should do, or I need to do, or I want to do, but then it has to be followed by, what am I going to do about it? So I think that it's an important, and again, like, these are the people that we ask in the Insights panel. They are self-identifying of, what they think. And I think it does show that, the farmer takes responsibility and recognizes that this is something within their own power that they can do to improve their own, financial literacy, their decision making, that it will benefit their farm, and that they don't have to be dependent potentially on government coming through, et cetera. So I think that's a positive. But I also think it does require then action of. We talked earlier in today's show about some of the financial tools on the marketing side that you can learn to use to help put a bottom on some of these things and try and maybe manage some of that risk. And that, I think, is the key part. I mean, I think often we get bogged down with, trying to improve bookkeeping or trying to do better, budgets or cost of production and all of those things are good, but we have to take the time to actually improve them and actively improve them. Or else we're just sort of wishing or hoping or thinking better financial decisions will help us, but we're not actually actively trying to make better financial decisions.
Our results at Real Agri Studies has been that 30% of farmers are using futures to manage marketing and risk. 16% are using options, and we have only 5% currency hedging. And I have heard from numerous people in these fields, those numbers are, from what their experience has been, too high.
Right, like that's overestimating.
That's overestimating. So the 5% currency hedging is sort of, that's the one that gets my attention, because most of our crops are priced in US dollars. We have lots of currency exposure. I don't understand why we're not doing more to manage some of that risk. But Evan, this is your game. So what are your thoughts when you see how farmers responded? 34% saying they completely agree to improve financial decision making, and 39% said some would agree. So definitely the heavy majority.
I'm just going to cherry pick Lyndsey, and I like the word hope because I'm there. Okay. Obviously we build our business around it, but the big one for me is speaking, and Shaun, you can attest to this, I hope, is that I've gone across Canada lately. The average age in the speaking sessions is going down, which is a good thing. We're starting to see the next generation actually take some accountability, which is huge for me, because I think they're the ones that are going to be answering that way. I mean, I've tried to teach old dogs new tricks. It doesn't work. So what we're starting to find is, I think the next generation that's coming back is seeing the complexities of some of these operations. And I mean, even a small family farm, when we start talking hedging and options and futures and cost of production and monthly cash flow, I mean, you can go down the rabbit hole real far. I think they're starting to feel a little overwhelmed, and they want the literacy. The other one is, I think it's a great sign. When we're not there with our hand out, we actually want a hand up. That is massive for me when it comes to agriculture, because I think, for quite a while here, we've been looking with our hand out, and finally some guys are starting to take it home. And if they're going to be running these multi-million-dollar businesses, that any improvement to me is great. My question on your numbers would be, is that percentage of acres or percentage of farms again? Because I mean, if we go back to that, I got lots of large farms that are hedging, puts, calls, all that stuff. I just don't have a lot of farms doing it.
Yeah, I'd have to go back and look at the differences based on farm size on that one. That's a good homework assignment for me, because I'm not short of stuff to do, Evan. I really appreciate that. Oh, man.
Better you than me.
Yeah.
Yeah. Add to the to-do list, guys. Yeah. Add to the to-do list.
So true. Kelvin, what's interesting is that if I go back a couple of years when Justin Funk and I looked at, where are people spending their time learning and development? Financial and accounting, just like more like farmer CEO kind of stuff, I would say, that whole category, very low. Everybody's paying attention to production and marketing. I think maybe we're starting to change a little bit. I think this is positive.
Yeah, I agree. I think that this is a sign that the tide is turning a little bit, and you could also and to me, what you found with Justin in that research also underlines just what you see when you go to a farm conference and you've got a room with an agronomy topic next to a room with HR management topic. The agronomy topic, production, is what people have traditionally paid attention to, at least by farm number. Again, to Evan's point, acreage number maybe it might be a different story where more of the acres are focusing more on management, and not to say that production and agronomy and those things aren't important. It's just that those have been naturally what I think many farmers have gravitated to and had an interest in, that more than sharpening their pencil and that type of thing. So, to me, it seems like we're especially as the younger generation takes over and we're seeing more business acumen in terms of our industry. I think that this is a sign that underlying a narrative, I think, that is happening here, where we're moving that way.
Yeah, and I also want to make it very clear that this discussion is not about larger farmers know what they're doing, smaller farmers don't. No. There is a lot of larger farmers that have no bloody clue financially what the hell's going on in their farm.
That's a good point.
And vice versa. Yep. And one of the things here is if our KPI as an industry, and we judge health of the industry based on how many farmers we have, or how many farmers did we not lose this year, then we can't ignore the number of farms for the sake of number of acres that are doing these sorts of things. We have to, if that's our KPI, we got to pay attention to the number of farms. Is that not right, Kelvin?
Yeah, totally. And then that's where we get into discussion about what our KPI should be there, whether the number of farmers, and that gets into politics and why politicians back certain programs or policies and not other ones, that type of thing. But yeah, that is ultimately, I think the consideration needs to have a balance of both.
Yeah.
Well, and we're seeing it on the uptake of the programs too, like within Farmer Coach, and that is the large scale farms. They don't attend the courses much because they've got a lot of these skill sets, whether they've hired them from outside to bring in or they've learned them inside. You can make that call, but it's the mid-sized, small-sized farms that are actually taking the initiative to go out and do this stuff. So I'm 100% on board with you, Kelvin, that we need all the farms, and it's just who's hiring the specialty out and who's actually bringing it in and learning it, right?
Yeah, I think that's an important point, Lyndsey, is that, and I try to get this across in a lot of the presentations here this quarter, is regardless of your financial skill and farm management skills, this is critical. It's important.
Yeah.
But if you self-identify that you're like, this is not my strength, and it may not be, that's okay. Who the hell comes back to the farm and says, I can't wait to get into the books? You know what? I can't. Well,
Evan's
weird.
Yeah, exactly.
He's an anomaly. He's an outlier.
Yeah.
Most don't. They want to raise the livestock. They want to grow the crops, right? And so if that's you, that's okay.
Yeah.
But you got to hire it out. You got to find somebody to help you.
So, and this is where exactly, and whether you're a 1-person show, a 2-person show, or a 30-person show, you have to at some point recognize, okay, do what you do best, hire the rest. And maybe that's internal. Like maybe that is, we have a 10-person team who loves health and safety. You're the health and safety coordinator. Who loves bookkeeping, or who has a great idea to simplify it, put it into a way that everyone's actually going to use. Perfect. You go do that. And if you're devoid of certain either interests, talents, skills, either go out and get them or hire them. And realistically, to your point, Shaun, the bottom line is these are things we have to improve. So it's not about you have to do them yourself. It's that the viability of your business requires that there's a certain level of management that probably needs to improve. And that's not, some sort of shaming or some whatever. It's just, it's what we have to do. We need to raise the bar here on our financial management. And that means either doing it, learning it, or hiring it out, or encouraging one of your staff members who wants to do this to go out and do it.
Yeah, my dad had a phrase when it was like, "Hey, we got this. We got it. We just got to do it." Like we have the capacity as an industry to really raise our game in this area. We've done it agronomically. We've done it production wise. We can do this. I know we can. Hey, that's all the time we have here on Rural Radio. But the best part is we got a bonus today, and we're going to talk about Evan's research that he has done comparing the now versus the 1980s, because there's a lot of people running around saying the 1980s, they're right here. It's back, baby. I will get Evan's opinion, what he found, looking at the actual numbers, not just some of the hysteria. If you have any feedback on today's show, you can send me an email, shaney@realagriculture.com. Thanks so much for getting real and getting connected with RealAg Radio.
Thank you for downloading this RealAg Radio podcast, brought to you by new Barricade 3 herbicide from FMC. Now in an 80-acre case, Barricade 3 herbicide means fewer trips, less hassle, and more in-crop acres covered. Big performance, big value, big-time broadleaf control. See your local retailer today.
And we're in the bonus here on RealAg Radio. Lyndsey Smith, Kelvin Heppner, Shaun Haney, and Evan Shout. Of course, Evan is the host of the Truth About Ag podcast, also with Farmer Coach Maverick Ag. And probably another company started this afternoon while we were here on the air. Okay. The bonus is where we get in trouble. And we got something cooking here.
My turn.
Evan, you did something real cool in looking at the numbers of the 1980s versus the financial realities of 2026. The floor is yours. What did you find?
Well, I found out this strikes a few emotions, to be fair. So, to be fair, the big one was I get asked this question way too many times this day and age. I mean, whether it's pessimistic, optimistic, I don't know what it is, but It comes across my desk daily. And obviously with the 50,000+ views that this blog has taken, obviously it's top of mind. So the big ones, guys, is that I wasn't looking at inflationary numbers. So I wasn't inflation testing any of the actual dollar values. I was looking at the ratios. So the banking ratios, the key performance metrics on farms to see if we are looking at a crisis coming, because that's what everybody believes, or demographically, the older generation is still fearful of. Let's put it that way. So I looked at 3 ratios. I looked at your debt service, your debt to equity, and your cash flow, your working capital. And theoretically, based on the ratios pulled from 2025 versus the early 1980s, from 80 to 83, based on census data. So I wasn't just letting AI do its thing. I actually pulled and read. If you want a good read the 1983 census. It's got a lot of great information for you. But what I identified was working capital. We are higher today than we were then. So farms have more liquidity than we've had in the past. So the big argument we've been hearing is that farms are tight. They're not going to be able to afford, land prices are going to drop because guys can't pay the cost. It's not true. We have more cash on farms today than we did in 1980. Then I went and looked at debt serviceability. Can we actually make repayment on these massive leverage farms that everybody believes are too leverage? And the answer is yes. Our debt service ratio is higher than it was in 1980. So even with the additional debt load, which is about 1,000% higher than it was in 1980, we are still able to pay those bills. And we've talked about margin and all the increased costs today. It does not matter. We are actually still more profitable in compared to our debt load today than we were in 1980. Third one, debt leverage. What's our security done? We all know what land's done. So from that one, this one didn't shock me. But the one that shocked me is we are actually in that 20% or less debt to leverage number, which means even if land did take a drop, there is very little risk on total farms today that you'd have to start deleveraging or selling land. So the drop in price, it would be a loss of equity on paper. And if you're a retiring farmer, yeah, that's a concern. But from a mid-range farmer that's still in the business for 20 years, it's a blip that we move forward and nothing happens. And then the last caveat for you, 1980, interest rate was 12.89%. Yeah, 2025, Bank of Canada was 2.25. And the majority of farms I work with are locked in for 10. So when you look at it that way, the interest rate risk that they had in 1980 versus today is almost a nominal discussion.
Lyndsey, how do you react to that? Go ahead, Evan. Sorry.
No, I was going to say take that one and disprove me, Lyndsey. Go.
I am not about to do that. However, I would love to know, because this causes like reactions in my belly, and I'm sure that there are many people, right, that it's like, ugh. Oh yeah. So this, what do you get from the audience as far as pushback on this? On which one of those points is the one that everyone's like, yeah, but
what age are they? And then I can give you the answer.
Great. Okay, so let's say they're 65 to 70.
Yeah,
okay?
what are they saying?
Start there. What do they say?
65 to 70 are still going to go back to that we are unprofitable and the interest rate increase wasn't the only issue. And they're not correct. They are correct. We had 3 or 4 years of down pressure, down cycle on profitability. The only reaction to that I have is that majority of farms I have today have stronger insurance than they've ever had in the past. And with, the agri-stability programs, the private insurance, the crop insurance, we have a 4 or 5 year runway that they didn't have in 1980. So if we're going to have those discussions, this has to be a decade long profitability hit. And then, okay, I'll give you that one. If we don't grow crops for 10 years, or if the market goes to $8 canola for 10 years, you're correct. We're in trouble. But that's also a big crystal ball that we're going to make the assumption that we're just going to have the worst 10 years in agriculture coming forward that we've ever had.
Yeah. And one of the things that I'm trying to figure out in my head here about the 2026 situation relative to, say, like a disaster of the 80s that brought farmers to their knees, and some had to sell and were out, and some will describe the torment of how many years it took to grow it back after all of that financial pain. Is it like canola is an example? We're like one market rally away from profitability on those acres, which we've seen here in the last 2 weeks. That to me is like not like when I think of the 80s, I think of like systemic. Like I think of like deep rooted, multi-year, 1930s, like we are really in trouble.
Yep.
I don't know. You walk around a Commodity Classic or National Farm Machinery Show or Crop Production Show. I'm not getting that vibe from people. This doesn't. There's issues, but it's not as like systemic as the 1980s were. And I was 6 years old, but believe me, my parents talked about it enough.
Yeah, exactly.
Right? I don't know. Kelvin? What do you think about this?
I'm curious, Evan, also on age. I'm going to give you some homework. Or maybe you've done this already.
He gave me homework. You give him homework.
Yeah. The difference on those ratios representing how healthy a business operation is between younger farmers and old and that 60 plus, and whether there's as much buffer in that incoming generation that we're expecting to take over all these acres and capitalize all these acres in the next 10 years, whether they have that same amount of buffer for a shock.
Yeah, and I think that was the one disclaimer I gave in the blog, guys, is the old baby boomer, let's call it the baby boomer disclaimer. If those acres don't transition and they make the next generation buy those acres off of the outgoing generation, you're correct. The young farm generation will be tighter than we've ever been because you're essentially rebuying the farm. Now, of that, let's call it 65% of assets that are with 65-year-olds or older, how much of it transitions? I don't have the data because no one in Canada has the data. So how much of it will get handed down, which means the leverage model stays the same, goes down to the next generation, versus how many are sold or liquidated and then have to be rebought, whether it's third party or family. You're correct. I have no idea. So that was the one disclaimer, is that if every 65-year-old liquidates his land today, we're probably going to see a land hit, and we're probably going to see a bit of an 80s crisis where supply is higher than demand. And I don't have the answer to that. And that's the one unknown right now, is succession in agriculture is terrible.
Yeah. But how would, say, debt service ratio for a 40-year-old growing farm looking to expand owned by a 40-year-old couple instead of a 70-year-old couple? What would there be a noticeable difference there?
Majority of the farms I work with, Kelvin, to be fair with you, are 40-year-olds. I mean, 65-year-olds are not looking for the same kind of progressive growth that our firm actually plays with, to be fair. So in our numbers right now, our average debt service and our average debt to equity, all those are actually better than the numbers that came out of the 2025, the average. So yes and no, depending how consolidated and how progressive you were the last decade. But the one thing I give a caveat for is don't look over the fence and assume that certain farms are tight and in trouble, because those will be the ones that surprise you.
100%. 100%.
The other answer for you, Shaun, is that the wheat average yield was 38 in 1980. It's 58 or 59 now.
Yeah.
So prices haven't improved. Don't get me wrong. We can have that discussion, but we are way more productive, whether that's good or bad, with the supply demand of food in the world. So technically we are growing way more bushels on a farm today than we were, but our costs are up too. So there's a bit of a wash.
Yeah. And there's a difference. In conversations, I had one this week in London, people talking about succession and how to bring your kids into the business. And what I say a lot is, I thought my dad was excellent at this. He had me in the room early to be a part of the financial conversation. No different than when you're talking to the ag retailer or the equipment dealer. He wanted, the rule was sit there, shut up, and don't say anything. Right? Don't ask any questions. You just sit here and listen. And, I'm 17 years old, and you're in the room with the banker, and you're getting a handle on the vibe and the conversation, and it allows you to do some follow up in the truck on the way home, and you're learning. That is not commonplace on farms today. I think that's a bit of a minority situation. The other piece here is people will say, oh, you know what? We got to make sure the youth have skin in the game. Yes. But skin in the game doesn't mean you need to purchase this entire farm from me. And, I'm really threatening your economic survival going forward. Like, there can be like a midpoint that presents some risk, presents some leverage, presents some sleepless nights. There's some adversity, but it's not putting somebody in a situation where you are basically debt loading them to basically fail.
Yeah, we call it time, brains, and money, to be open with you. That's our succession planning within our firm is, who's got the capital? We already know that the 65-year-olds that are moving out of the business, but they've also seen, let's call it 10 to 20% returns on the farm, and they've seen 10+% if you're in Saskatchewan on the land. So when you're looking at 20 or 30%, do I want them to pull all their money out and sell all the land and move on? No. Actually, for them, even for their retirement, I want them to invest back in the farm. So what we're seeing more of now with the incoming generation, and you're correct, they need to be in the meetings. They need to know the financial strength of the farm before they sign on for this roller coaster. But what we're starting to see is they'll provide the labor, the management, and the outgoing generation is still the bank and the landlord. And if you can convince them to use a structure like that, both sides win, because the retiring structure, instead of putting their money in the S&P, which has had 27 corrections since 1980, land's had one, let's be fair. Let's keep the safe asset, which I call it safe. Some will argue with me, and that's fine. But let's keep it in the business, keep it in your legacy, your family, whatever you want to call it, and let the kids come in as a laborer and then move up until they buy their first quarter and learn that way. And let's make them a percentage with us so that everybody's moving the train in the same way, instead of saying you buy this and go into deep debt and try and make a living while I take the money and invest it somewhere else that's making me a lower return.
Yeah. I was talking to an audience member about a month ago who's, basically said, came back to the farm. I didn't know enough about the financials. I was judging things based on the visuals, new half tons, new machinery. Dad sold me a pig and a poke. Like we were in a disastrous financial situation. I had no clue what I was walking into. And that's an example. I think there's a lot of that. And that's an example of what you're talking about. You got to know what you are financially coming back to, and you're going to be in the challenges you're up against.
And don't sit there and work for 30 years before you find that out.
Oh,
if you're waiting for sweat equity on something that's got no equity,
one day this will all be yours.
All be yours.
Yes.
If anybody ever says that to you, Lyndsey, if your parents say that to you, run as fast as you possibly can.
Yeah, Kelvin.
But that is one of the issues of the older generation hanging on to the asset for so long, is that there's almost a middle generation now that won't have runway to accumulate equity in these assets either.
That's true. And that's where the split on labor and management, right? If I'm a 60-year-old farmer, I need to trust the next generation is going to come in and work towards the common goal, and then start giving them, splits based on how many decisions they're making and how much labor and seat time they're putting in, versus just requiring them to go out and buy land or reinvest their life savings or sweat equity, which is a swear word in our business. Is let's actually pay them fair market going forward. And the other one I've been asked a lot is the younger generation is scared to have these conversations. It's a negotiation, guys. If you're running a multi-million-dollar business, the outgoing generation requires you to operate, because they're not going to continue working 3,000 hours a year. And you need their capital, because if you go to the bank, you're going to put yourself in a position like Shaun and I are talking about. Like, there is a negotiation there where you have some leverage, and a lot of people are uncomfortable having those conversations. And going back to the run, if you're uncomfortable with those conversations, run. Go get a 9-to-5, because it will be much safer income.
Well, I am sympathetic to the younger generation being concerned about how to approach the conversation, because there's when you don't hold the capital keys to the castle, right? If that conversation goes poorly or it's judged improperly, you can set yourself up for a worse situation where it's like, I wish I would have maybe I wish I didn't bring it up, because you have to bring it up, but I wish I would have gone about that differently. So there's a lot of anxiety about this, because, to be fair, the older generation, we're really categorizing people here, but the older generation doesn't necessarily handle these discussions very well. You ungrateful POS. You know what we've done for you? You just want to kick us out of here? Oh boy, guys, that's a conversation happening every week in agriculture in North America. But
so who gets the Haney wealth? Is it Lyndsey or Kelvin?
Well, if he lives right, there won't be any left. That's really
right.
That's how you're right. Yeah, exactly.
Oh, gotcha.
Somebody take me out of this. I tell you,
he's tired. Okay,
exhausted.
All right. Yeah.
Lyndsey, you got the final thoughts.
Oh, do I?
Yeah, you do.
On this?
Yeah.
Oh, cripes. Okay. All of this. But in saying that, it does feel, or can feel, incredibly insurmountable. And I as I usually do, I sort of fall back to the communications piece, and exactly that. You have to be willing to have these conversations, but you have to be willing to listen. And you have to be willing, exactly that. It is a negotiation, and it's a negotiation of your future for everyone involved. So how important is your future? It is willing to have uncomfortable conversations, or it is worth it to do it. And if you don't feel confident, there's lots of help, a lot of support out there to gain. Again, we talked about financial management skills, so-called soft skills, which I think is bullshit. They're not soft at all. Things like dealing with people and still wanting to actually be family after this is pretty important. Negotiating multi-million-dollar deals, you should have somebody in your corner who has done this before. What is wrong with having somebody help you out on the communication of this, on the how to approach certain issues or topics, whatever? So yes, the conversations, the talking, the communication, so incredibly important, and you don't have to do it alone, but you do have to do it.
Yeah. Oh, well put. I also want for the record, Lyndsey's the one that swore this week. When I swore, I used acronyms.
That's correct. Yeah, but we're in the bonus, so it doesn't count.
I was sensitive to the people that don't like cussing in our audience. Lyndsey apparently doesn't care. I just
what's her email? What's her
email? shaney@realagriculture.com.
Okay.
Yeah.
Hey,
you're gonna go.
I gotta go.
Yeah. Okay.
Lyndsey,
everyone, this was a lot of fun.
Yeah, Lyndsey, have a great weekend. Okay.
You as well.
Evan, fantastic. Really appreciate having you on here.
I love being here, Shaun. Anytime.
Hey, encourage everybody to check out the Truth About Ag podcast. It is on the Real Agriculture Podcast Network. You can find it on our YouTube channel as well as wherever you get your podcasts. There's 1,000 pod catchers out there. Kelvin, enjoy your winter weekend in Manitoba.
Thank you. It's the end of hockey season here, so we'll wrap it up, and good discussion today. And I'll talk to Elon about the internet next show.
Okay, thanks. Give him a call. Give him a
Great stuff. Hey, everybody, if you do have feedback, send me an email, shaney@realagriculture.com. Thank you so much for downloading the Real